Jeff, I just want to push back against something you said, not because I think you're wrong.
Although he was plenty wrong, as you're about to find out.
But I want you to clarify it. You point out that it would be impossible for retail investors to force a squeeze in something like silver and the differences between cornering a commodity versus squeezing a stock. But I remember 10 years ago, there was a moment when GLD, the gold ETF, had more assets in it in dollar terms than the SPY. And I do think that GLD was moving the price of gold. I can imagine a similar situation with silver and the silver ETF if people get excited enough about it, where what happens in the markets ends up influencing what happens with the actual metal in real life. You're saying you don't think that that's a possibility?
I mean, you're talking 900 million ounces in the ETF versus a 25 billion ounce market. Versus a 25 billion ounce market.
So here is the 2025 World Silver Survey, and there, as you can see, total supply last year was just over 1 billion ounces, just under that the year before. And going back to 2016, you can go back farther, although you're not going to find a number anywhere near 25 billion ounces. So Jeff's only off by a factor of 25 in that one, unless you count
the total amount of open interest of silver, including both above ground and below ground.
He just said that, yes.
You're talking 900 million ounces in the ETF versus a 25 billion ounce market.
There's 900 million ounces of silver that are made every year between new mine supply and recycled silver. So, I mean, let's just say it's a billion.
A 25 billion ounce market.
The only other thing I could think of is that he mentioned the open interest of silver below the ground.
Open interest of silver, including both above ground and below ground.
So he's counting the molten silver that's deep in the core of the earth that we haven't mined yet.
But gee,
sorry. No, I'm serious. Like, I mean, I don't know what he's talking about.
Those other ounces just sit. They don't move.
Right, but you look at the flows going in and out of these ETFs, they're not that big.
So here's a look at the silver ETFs over the past 20 years, which is basically the entire history of the ETFs. And you can see here that when Jeff said the ETF inflows weren't that big, that actually happened literally 2 days after this giant spike here, which I might add, you can see that there was another spike the day before that right there, that aside from that giant spike would have also been the third largest in history. So there's that. I
guess my question is, forget the ETF. In terms of thinking about how you're going to create a squeeze, the shorts are the ETFs. The ETFs buy the physical, they turn around and they sell on the COMEX.
Well, on that one, at least hopefully for Jeff, that's not true, because I think that would constitute financial fraud, given that here is the SLV prospectus, and it states clearly the trust does not trade in silver futures contracts on COMEX or any other futures exchange.
The ETFs buy the physical, they turn around and they sell on the COMEX to be able to hedge that physical position like any other corporate.
Although the only problem with that is that the SLV trust is not a corporate. It's actually a trust, if you can figure that. And there's actually nothing for them to hedge since it's just holding silver on behalf of its customers. Or at least that's what its prospectus says it is doing. Although Jeff says the trust is shorting on the COMEX anyway.
It's not a naked short like in an equity.
Partly true, although also incredibly misleading, because it actually is a naked short. And the part that's true is that that's unlike equities, because in an equity you have to borrow the shares, whereas on the COMEX you can just naked short.
But here's the main reason why I don't think it's possible to squeeze one of these markets like what the Hunt brothers did in 1980. You got position limits in these markets.
Now, that part is actually true. There are indeed position limits, and as you'll see on January 28th, 2021, actually a week before Jeff gave this interview, the COMEX updated their position limits for silver, which is 3,000 contracts in the spot month, and then for net deliveries is 3,000 per month, which would be great except for the fact that JP Morgan routinely goes over the delivery limit. Here you can see 44.59, there's 7,013, 56.06, 34.46, 81.89, slightly over the limit. And just in case you're saying, well, that's their customer account, then you can look in the row down here where you see for the house account, they actually issued, which means they delivered on 5,950 contracts. And in terms of Jeff's bank, Goldman, well, they're not that much better. In fact, here's that same notice from 2021 mentioning that the limit in the gold futures is 6,000 contracts. And go figure, on the gold deliveries, we see Goldman delivering 8,900 twice in a 3-month period. And I have called the CME before and asked about that, and they said, well, it's possible that a bank could have an exemption from the CFTC. And I said, well, how would we know if they had that exemption? He says they can't tell you that, which leaves you to guess whether they have an exemption or if the CFTC is even looking, especially since the CFTC actually fined JP Morgan $920 million for spoofing and manipulating the precious metals and treasury markets on hundreds of thousands of occasions between 2008 and 2016, which of course they didn't actually report on until 2020.
That's why I say it's incredibly unlikely.
Although apparently it wasn't entirely unlikely, given that his bank actually signed off on changes to the prospectus the day before he went on CNBC and said that, mentioning that the demand for silver may temporarily exceed available supply. They were talking about the ETFs there, the same ETFs that the host asked him about. And whether you want to call that retail or institutional demand, it is also those same ETFs that have left us in the midst of an historic silver squeeze as prices have soared in the London market to over $52 an ounce, even though
it's incredibly unlikely.
Yeah. We'll talk to you soon. Thanks for being here. Good to get your perspective.